Today's Monday, February 16th, just after Valentine's Day weekend. I have a few things I want to discuss. I have a certain scenario that I think that the world is, there's an awful lot of black swans and red flags that are going on in the world. We have the Greece exit issue. We have war in Ukraine. We have Russia in severe economic trouble because of the drop of the oil. We have China slowing down. So there's lots of red flags and black swans. I have been saying that we're going to be getting probably the buying opportunity of a lifetime coming within 2 to 3 years. I've been advocating that people, particularly my investors and myself included, I have winnowed my portfolio down to very strong core properties that I want to keep. And any marginal property I've sold, I've gone into cash. So I want to talk about strategic real estate. We went through a really terrible downturn, 2007, 2008, 2009, 2010, and the economies were really just very, very difficult. What's really helped me along was the fact that I had income coming in every month. I had dependable income coming in. Now, prices of my properties here in Phoenix certainly took a nosedive, and values dropped significantly. Probably one of the worst in the country here, with the sand states of California, Nevada, Arizona, and Florida. We took the brunt of it. But what was interesting was that the income that came in off those rental properties, really I didn't have too terribly much trouble with those. Even though the rents eventually softened up a little bit, so did the taxes, so did the insurance, and actually so did the maintenance. So there's a lot of mitigating factors that really helped me along with that. But the thing that I had was I had income coming in virtually every month, dependable monthly income. Which leads me to this, is that if we're at historical highs in both the stock and bond market, just this, the word that says historical means that we're at an all-time high. I personally have removed most of my portfolio and I'm sitting in cash. When you're at historical highs, how much more do you want to go? Personally, I would rather buy into a marketplace that is not at historical highs, that still has room to go. And when you have markets like the stock and bond market that are they're priced for perfection. Even if you take your money into 30, 60, and 90-day T-bills, and you have just a blip up in interest rates, those bills suffer. We're down to historic. We could go negative. Maybe we go negative. It's possible. But it's also possible if we have any kind of issues in the world that rates go up. Say if people have a problem with currencies, or they want to take their things into real things, which is what I'm advocating for you to take those profits. You've had really good profits. If you've been in the market for the last 2 or 3 years, you've had really good profits. Maybe you should talk to your advisor and think of taking some of the profits off the table. Maybe you should talk to them about an exit strategy if things get bad. At what point would you sell? Now, here's what I'm advising, and here again, I'm in the real estate business. Our markets really have room to go. We're still got growth. We're still a growing economy. We're still a growing demographics. Everybody needs a place to live. And the income is going to be king. It's imperative that you have income. So what I would advocate is that you look at your stock and bond portfolio, and perhaps you take some money off the table and allocate some to real estate. If you were to advocate some to real estate, and you have no real estate rental properties, then I would say you want to take a third of your cash and deploy it into opportunities now, cash flowing opportunities now. And the rest I would sit in cash, because I think that we have some really good, we're going to have probably the very best buying opportunity in your lifetime coming here within the next 2 or 3 years, and you need the opportunity to take advantage of that. Now, the reason I would say take a third of it and put into your into real estate now is you need that income. When things start going down, and if you don't have any income, if your job gets affected, like my job is, we're economically sensitive. If the economy slows down, we slow down, and I still have bills. My bills just keep going on. So it's nice having an income. So that's what I would say to you, is that if you deploy a third of your income into cash flowing properties, you're going to have some mitigating income coming in off of rental properties. And I would strongly recommend some good conservative investments. Now, you just don't go out there and buy anything that comes along. It sometimes takes a long time to find a good strategic piece of property. Now, I have been advising my advisors to go down to core properties, take a look at core properties. Anything that's marginal, anything that you're not sure you want to keep, we have been selling. I've sold myself, and we're sitting with cash with that. We're going to use that cash, as well as the cash from any stock and bond transactions, to be deployed as a source for cash and acquisitions. Now, these acquisitions aren't real easy to find, but we continue to find them. We're here in Phoenix, which of course is probably Phoenix and Scottsdale and the metropolitan area of Maricopa County. We have some really good opportunities. We're hugely growth future here. Our business's future is really, really good. I'm so terribly bullish. 3-4 years from now, it's just it's remarkable. People call me a bear, but I'm really not. I'm a bear for right now, but I'm so bullish. So I want to keep a presence in the market, and I continue to buy. I continue to advise clients to buy, but only things that are very extremely compelling. These are the type of things that we want to add to our portfolio. But anything that's marginal needs to be taken care of, needs to be sold. So, which leads me to this. You have historical low interest rates. So if you take a third of your money and deploy that, you can deploy it strategically and leverage that. These rates are so terribly compelling. They may go down a little bit, but we're long-term investors. We're looking maybe 5, 10, 15, 20 years out. And let me tell you, 10 years from now, if you can get these rates at 4 and 5%, you are just going to look like you were the smartest guy in the room. So, but I would not over leverage. You want to make sure that you get cash flow. There'll be a sweet spot where your cash flow is the best, and that's where you want to go. And take 30-year fixed rate mortgage. You can always reamortize yourself and add more money to them. They're, and if you want to pay these off earlier. So let me just take a look at my notes. If I'm correct, I think that we're going to have some problems coming. I'm not quite sure when, but I think that the world is certainly slowing down. And I think that if we have some income will be king. You're going to be so glad you have some income. So take a look at your portfolio. Anything that you still have that you shouldn't, it's time to sell it. You need to talk to your advisor about putting properties into your portfolio and see if that's something that works, makes good sense for you. You may consider talking to your financial advisor about an exit strategy. What if things don't go the way you and he think they should go? What are you going to do about that? And you're always welcome to call me here. God knows you call me. I'm thrilled to death if you call. So you can call me here at my office, 480-451-9339. We can discuss your concerns, or you can give me your thoughts. Anyway, my very best to you all, and we'll talk to you later. Thank you so much. Bye-bye now.